right, let's get into it. Where we at? 10:47, 31st of October, last day of the month. Happy Halloween trading kind of thing. So let's start off with DXY because this is yeah, it's trading well. It's respecting the chart. It's doing kind of like what we expect it to do. And by doing that, it's giving us some sort of lines that we can really sort of work off. So look, quick recap of it all is that we've got this channel. I mean, look, obviously I won't bother going all the way back over here because we know what's been happening. But if we look at the most recent sort of price action, let's put it on the 4 hour because probably see it a bit better. We can see it had this little channel. It was respecting it, bang, 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 little overthrow up here. We had that negative divergence, as you can see here. So interesting thing with this is like, I guess actually that is technically a higher high through here, but it's not a significant higher high. But it doesn't need, with negative divergence, it doesn't need to be okay directly moving up while, so like, yes, technically it does, but what I'm saying to sort of get an actual proper takeaway from it, you can also see that this is still coming up to the same level each time, but it's coming up on less pressure each time, which means that there's less likelihood that this is actually getting the backing of the market and it's actually going to push through to the top side. And we can see this is a perfect example here because as this comes in and lower, comes up to that same level, here's your high here, here's your high here. This is the first time it went into that level. It's been sold off straight away. It comes in there again. This one at least closed up near the top. This one, as soon as it got up, lower buying pressure, and bang, rejected straight away. And obviously, second attempt bang came back down here. So look, it's pretty much, as I said, trading to the plan that we had, which is that you know the rejection was going to come from around this zone over here. It was going to target this area over here. This is why we got the circles here, because we said, look, you know what? It's going to break down here, as it did. So it came down into this zone, this little first zone here. This is the horizontal. It pushed back up. Yes, it pushed back up into this section just over. Well, actually, hold on, wait. Yep. Pushed up into this section here. Test the underside of this resistance. Support, now resistance, and then drive down. So with these little lines and this little price action flow here, this isn't a time thing. I'm not expecting it to come through this amount of hours. This is showing course of action. Break, find some resistance, find some support where the buyers had been previously. It's the same thing every time. If we make it a bit bigger, you can see it. Maybe if we put on the 1 hour as well. You can see coming into an area where we've seen the buyers previously. Buyers gave it an attempt here, pushed up, test the underside to make sure that this is an actual breakdown and not just a sort of quick little fake out. Look, and this is the thing as well, sort of like trading the same markets over and over, you get to see these things. So for instance, copper, it'll do these fake outs and then keep on charging and going. So, anyway, it's come up here, it's retested the underside and it's driven down. And you think, okay, if it takes out this low, if we see that the buyers that are at this level here, which have sort of kept it elevated, if they're not there, where are they going to be most likely? Well, you look at the chart, you look left and you look down over here, and this is where the buyers have been previously. We know that this big red area is actually quite a high time frame support area anyway, and so it's quite significant. So that combined with the most recent price action through this area, we could say that, look, this is where they're going to be targeting it, and this is where we're going to see a reaction. The reaction is going to push us up. Where's it going to come into? Another area that we've got isolated. You can't see it so much on the 1 hour, but we've got this area marked out. If you go way back over here, you can see that this is a good selling area. Market like to sort of really hammer it down from this area. That's why we had it marked out. And this is where exactly it came up into. So this leg through here, let's get back on the 1 hour. This leg through here is that. As I said, the lines aren't sort of a time thing. It's more just a price level thing. So up into this area and then push down. And this is where we're sort of at the moment. It has held the second time coming down here, so it's targeted here, because these are the moves that you want to see. You want to see you sell down, find support, push up, find resistance. This is the leg that determines the strength of the move, because this will be the one that gives you a double bottom, lower low, higher low. At the moment, obviously, as you can see, it's come in for a bit of a double bottom. Now we've got the bounce that's come up here. Now we've got to sort of determine, is this going to keep coming up over here, or is it going to come back down here, in which event it may be quite likely to sort of come through. So that's kind of where we're at the moment. So, it's just sort of confirming our lines, basically. So let's get rid of these so we can see what's going on. So you've got the buyers still keen here. Obviously quite a strong reaction the first time. Came back down here a second time. Now we've got to see the reactions so far. I mean, coming into the close of the session, the reaction here is quite different to the previous reaction here. This reaction here was very strong. As you can see, this is on the 1 hour and pushed right up into the zone over here. We had a bit of data overnight as well. GDP, we had also ADP. So ADP, the jobs in the private sector, beat quite strong. Let's flick over and we'll have a quick look actually. So Aussie, I'll get onto Aussie because Aussie's an interesting sort of bit of price action there as well. Just bear with me 1 sec. Where are we at? Okay, so we had a couple of things. ADP, so jobs in the private sector, revised up previously, expected to move down. Not only did not move down, but it actually beat substantially, over twice what they were expecting. And obviously quite a significant jump up even after the revised number. So it was 140 last month, revised up to 159, 233. That is strong. Again, you play these things out. Like, what's the scenario? What's going on within the companies, which then extrapolates out to the economy, in which you're employing a lot more people? Well, it's generally because you're pretty happy and confident with the state of things and that. You're not sort of like, oh my God, are we going to be able to pay our bills next week? Not quite sure. Let's hire a whole bunch of people. No, that's not the case. When you're feeling confident, when you're feeling stable, that's when you look to expand. And that's what this number here represents. Though, contrast to that, then you've got the GDP. So the GDP obviously sort of measuring, the gross domestic product kind of thing. So basically the output of the economy. And this was at 3%, expected to stay flat, and it actually moved down. So, they kind of like, a little bit different. Like, maybe the confidence is up over here, people are employing more, but, at what cost? Because the production and actual output is not moving so strongly. So a little bit of contrasting data there. Obviously, USD bullish, USD weak. And you can see this in the sort of chart. So if we flick back across to this one here, this was your ADP, sort of this sort of move. Actually, where was it? It was about here. ADP got you right up into here. GDP, boom, started to move this down. So on the 1 hour, you can see it as it came into this area here. This is around when the GDP came out. And they're like, whoa, actually, hold on, wait, not so good. Bang, back down, and here we are into this little support zone here. So what we're looking for right now is a break of this level here. We want to see, this is on lower, let's put it on the 30 at least. What we want to say, we want to see an absence of buyers here. We've seen them previously. They came in last night. They've held it a number of times, let's say 30-minute, but they've held it a number of times overnight. What you want to see for a downside move here is a break of this level. We want to see an absence of interest of buying it at this level. If we come down here and then bounce, we look at this little previous bounce high, and then we look back up over here and more or less this range to continue. I think the fact that this channel broke and retested twice here, as you can see, I think that needs to play out a little bit. So if we look at this channel here and we sort of go, okay, where might it play out? So, it's not necessarily going to be like the death of it all, but the way you work out measured moves with channels is the depth of the channel, which we can see moving along there. And then we take that from, and put it down here. So, I mean, look, a measured move of this, actually, hold on, mate, would be more here, in my opinion, because this is the initial break. These are just retests up over here. Sorry, excuse me. All right, so this would be your little measured move price target. So it doesn't mean necessarily that this is going to be the very super top for DXY, because as I've said a number of times with the DXY, this is how it, can't see it, quick Let's change the thing there. This is how it turns around. Looks like it's failing. Oh, no, wait, it's back up there. Looks like it's failing again. Oh, wait, it's back up there. So, look, there's no, at the moment, guarantee that sort of this is the very top. This could just be a consolidation before another leg. Remember, we got the election coming up next week. So it's very soon. And the market's supposedly pricing Trump victory, all this kind of sort of stuff, and that's a great sort of story for it all. So we'll see how that sort of plays out with it all. But it seems to be the kind of sort of agenda or the kind of sort of narrative that people are saying that look, this is all pricing in Trump win because he's going to go hard with the tariffs. The tariffs are going to be inflationary and yada 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 and all these sort of things. So obviously, if that is the case and it is sort of inflationary, well, what do they have to do? They have to raise rates to combat inflation. We know that. We've seen this the last 2 years, very evidently in that, and obviously sort of cutting in the reverse now, coming down. So, I mean, that does make sense that, look, if tariffs are the thing that's going to cause inflation to go up, and Trump is very sort of pro bringing back everything to America, stuff with them, stuff with their, with the currency, you don't want to settle in US dollars, that's fine, have a 100% tariff. China's moving forward a little bit, that's fine, 100% tariff. You know what I mean? Like, so if that is the sort of story, and the thing is, you got to remember whether it's the story or not, whether it's the actual truth or not, is beside the point. It's what the market thinks. If this is what the market thinks is going to happen, that's what they're going to react off. And so the idea is that sort of like, potentially if we see, Trump get in and the tariffs are the sort of main story, then that's, why US dollar is sort of strengthening or at least holding its gains through this whole period. I don't believe this whole move from the lows way back down here was Trump pricing. Maybe I'm naive to it all, I don't know, but I don't think it is. But it does sort of ring true through this sort of period up over here. So that's a little bit of sort of like overview of that kind of side of stuff. So look, if we hold this area here, then okay, we look at where the sellers have been previously, which obviously we've seen, the body candles here, overnight sellers here. This is most likely where we're going to come back up to. If we overshoot that, well, we come up into this top area over here. The RSI has pulled right back now. We're in oversold. So look, it does support the move if it does want to sort of move back up over here. So I think sort of like really above sort of like maybe 104.20 would be enough for me to sort of say, okay, this is going to be a range play. So let's add this a little alert and say, look to play the range. And we just sort of see it sort of move, like not just above this last candle here, but this little sort of congestion zone, little previous area where we've seen support. Can we see sort of that become the resistance to then sort of push back down underneath and sort of like get some sort of continuation to the downside? And of course, as I said, the flip side of this is that if we do take out these lows, if we see an absence of sellers at this level here, well, then we look to complete that measured move. Still only takes us to 103.68, still very elevated from where it's been. I mean, if we look at this on the sort of like, the whole sort of move from the lows, even a pullback here, which is just a completion of this, measured move through this channel, still doesn't even take you to the 23%. So this still keeps it very much in a cool, shake some people out, and then attempt to sort of move back up to see a sort of continuation. All right, I'm back. Yeah, so I think look, I think there's some sort of interesting sort of levels we can sort of see here. If we can, break above 104.20, well, okay, fine, on we go. Continuation to the top side here. If we do see a breakdown here, which I'm sort of probably leaning a little bit more to. I know it's sort of hard to sort of get against the US dollar at the moment because it has just been so incredibly strong. But look, it did have this channel. It broke it. We're at the swing lows. So look, a breakdown here. We know where it wants to go. I mean, apart from that, you could probably sort of look down to, maybe a little bit of an overshoot to these kind of areas where we saw like some strong sort of support and well, strong support probably more just down over here would be your level. But sort of like certainly, yeah, measure move down to 103.70 if we take out those lows. All right, let's flip across. We got gold. Keeps on powering on, but you got to think how much more has this got in it? It did have a bit of a sell down yesterday, and it got shook a little bit with that US data, but it recovered very strong. A couple of times they tried to sort of knock it down. You can't see it so much on this. You can see here, there's a little bit of sort of, obviously here's a sell down through here. Try to rally, sell down. This is around that sort of news period here. A lot of wicks down here, down to 70, back up to 87, and then obviously just at the moment sort of consolidating around the highs over here. So look, if we sort of say that this is your little area here, because it's looking a little bit weak on the get-go here, where we are 11:07 now. So there's still a little bit of time before we see sort of stronger sort of volume in, but certainly at the moment it's looking like this is your level. Above this for continuation, let's just say it's pretty much this here. These kind of chunky little support areas here. What do we got? 88 to, no, $2 support areas. They're not too bad. But I would say underneath this, then you'd probably be looking down around this area here. Let's make this one a little bit thinner. So these are your kind of areas that I'm interested in. Look, a close underneath 75, I think could be saying, look, you know what, we may see a little bit of a deeper sort of pullback. But realistically, look at these pushes, even off this break from the other day. And this is what I was saying, it's sort of like the failure to break down through here, take out these ones, take out these ones. It has just been a one-way trade, really. I mean, little periods of consolidation. But it does keep firing on. We haven't touched this line yet, which is what I'm kind of looking for. It's funny because I was saying when we were down here, it's sort of like 2700, 2720s, these kind of areas. I'm like, look, I'd be skeptical to short this down here. I would like to short it at 27. I think actually 2790 is where I sort of said because I think at the time I had this sort of placed it coming in about here. But again, these are price levels. They're not time things. And obviously, the longer that it takes to get up to this line, the higher that point becomes, of course. So I still think that we have a bit of a blow off top to come. If anything, I want to see this really get to sit here. But this is one drive, two drives. This is your big, massive stretched out third drive coming up over here. As I said, there was that other price target that comes in at 28.18 and 28.15, 28.20, that kind of zone through here. Look, if we get the sell down in DXY, this might sort of give us a push here. I'm not really banking a lot on that because really gold and DXY have been running very in sync recently. It's funny, actually, I put a chart up. Well, actually, I sent a chart to a mate the other day. Which one is it? Might have been this one here. No. Yeah, this one here. So let's put this on a higher time frame. Basically, just sort of showing sort of the. Oh wait, I didn't have it on here. Let's add it in. So, in Proscale. This is the chart. So showing the comparison between DXY and gold. So let's zoom. Whoop, not really prepared for this one, but this is the idea here. So we've got gold being this purple line here, DXY being the, geez, oh, I'm all over the shop here. Let me get these a little bit clearer, emphasize the points a little bit more, and put it on daily. Bear with me, this does make sense. Idea being with this, that we can see typically gold has an inverse relationship with DXY. It's not going to be a one-to-one in the sense of see how big this move was here, expecting gold to be coming necessarily all the way down over here. But as you can see through this period here, DXY is moving up, gold's not moving up, gold's more or less moving down. This period here, DXY is moving down, gold's moving up. DXY up, gold down. And then you've got periods like this. Gold moving up, DXY moving up, and they've moved together. Typically, as I said, they'll have an inverse relationship. This period here, outside this little consolidation area, DXY moving down, gold moving up, But again, now we're back to this period where DXY has been moving up, gold's still been moving up. So as you can see, more often than not, it's an inverse relationship. There are periods through here, and obviously where we're in at the moment, where it can run in sync. But 90, and this is what I say when I say it, sort of like 90% of the time, they'll run inverse, as you can see here. There's only, what I call 10% of the time, these periods here, where they'll actually run concurrently, and they'll both be moving up or both be moving down. So the takeaway from this at the moment is, one, it's going to revert back. So you've got two courses of action. Either this is going to happen, whoop, either we're going to get gold continue to move up. So let's get those things off, it makes it a bit confusing. Gold's going to move up, DXY moves down. DXY is coming into a resistance area. We're thinking it could sort of revert back off. Either gold continues higher, we move up, 2800, whatever, it doesn't matter, just pointing out the direction. Or gold comes down, DXY moves up. And it reverts back to its normal relationship, which is one of being inverse. So that's my sort of feeling with gold and DXY at the moment. So it's interesting to sort of think that, you know what I mean? Like, they're both moving at the same time, and one of these is kind of lying. One of them is going to break. And so you just got to try and pick out and sort of differentiate when that point is that they sort of revert back to their normal, and obviously, try and get on the right side of it all. Anyway, enough of that. Let's get back to what we're talking about. So that's why I was saying that I don't believe necessarily the driver for gold to take out the highs here, or take out the highs, basically take out that higher price level, is that of DXY selling down, because for the most part at the moment, as you can see, they've been running in sync. So, it's not like, oh, DXY sells off and gold moves up over here. I think eventually it will revert back to that. And if we do see DXY sell off, eventually they'll revert back to their normal thing. Gold will go bang up into 2800s. So that's my sort of feeling with it here. But that's a bigger picture. The short here and now, let's get this one off. The short here and now, above 90, 2800 is a big number. Probably some stops sitting above that. Nice little push up. Do you get a close underneath 75? If you get a close underneath 75, watch out for the wicks. Safer underneath 70, and you look down to 58. 12 buck move down here. The only thing I'm sort of cautious about gold shorts at the moment is that these pullbacks are very shallow. They're very shallow in the sense on the higher time frame. As you can see, like this big breakout move here, this only came to the 23%. It's very shallow. Even last night, that sell down, 23%, and bang, bought straight back up. So, even if people are sort of taking profit, there's only a few of them taking profit, and certainly whoever's buying it, or whoever's moving the market, they're waiting, and they're not going, hey, look, I can get it for a better price down here. So the thought behind that with this is that, if you believe price is going up to 28, just picking an arbitrary level anywhere, say you think it's going to 29, say you think it's going to 3,000, whatever, it doesn't matter. If you think it's going higher here, well, it doesn't matter if you buy it at 27.70. You don't have to wait for the best deal to get down to 27.55. You're like, well, it's going to 3,000 anyway. What's 20 bucks? I'll just secure my position here because I'm going to make a lot of money on it as it goes up to 3,000 anyway. So I don't need to wait for this super deal down here or super deal down here. And that's the mentality behind the Fibonacci retracements, in my opinion. That, it's showing that the buyers are hungry. They'll buy it no matter what. They'll buy it in a $10, $20 discount from the highs because they do believe it's going up over here. And you can see buyers are here, buyers are here. Like this is what I did the other day to sort of emphasize this sort of point. Buyers are moving up, buyers are moving up. I mean, you could do this. Buyers have moved up here. Buyers have moved up here. I mean, look at them. They're hungry. They're moving up. They're moving up. And the sellers, at best, they're holding the line. And we know what happens when they hold the line. When we see an absence of sellers at that level, that's when you get your pop. So I think this is a good chance to go over 2800, possibly realistically in this session as well. Let's see what happens in 45 minutes at 12 o'clock when we call it the volume hour for the metals. But certainly at the moment, you're seeing the buyers moving up over here. And this is what I'm saying. Like a close under here gives you the idea that, okay, it's doing what these candles couldn't do. Like, because these are held pretty tight on that line. But really, you want to see what happens underneath 27.7 because there is a chance it does a little fake out down here and then sort of shoots back up here as well. So higher confirmation underneath 27.70 if you're looking for downsides, or maybe if you're looking for buys back down over here and you want to sort of try and get something down at this level over here. I think that's certainly worth a shot. If you break this level here, you've either got a short-term short down here, or a sort of bigger, sort of a lower buy to sort of then try and capture a move back up over here. But as it is at the moment, the price action, 23% is the best you're getting for your pullbacks, which, means that obviously they're hungry. And as you can see, it's just consolidating this high over here at the moment. All right, flip across. Aussie came off the lows, did quite well. Interesting move yesterday. So this is the plan, and I still think that this is a plausible thing, particularly as I said, if we see DXY break to the downside, we could see a little bit more of push up in the Aussie. So Aussie incredibly weak through this whole period. And this emphasizes my point, which I covered yesterday with the Fibonacci retracement. All these moves were at 23%. Because at one point, this is the low. This was 23% pullback. One point, this was the low. This is dragging it from the high. So you go, okay, look, let's work out our Fibonacci. Let's work out where it is. You take your high, take the most recent low, because, at this point, whoop, damn it, I hate when I move those alerts. At one point, none of this existed. You know what I mean? So this was your current low. Came up here, that's your 23% again. And it just boom, 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 boom. And there was nothing you could chart on this to give you any sort of idea that we were going to sort of actually find some sort of base and find something to push back up. Like, because I was trying to short this thing, but I just couldn't get on. I was like, oh, look, I'll wait at this level here and I'll short it. I'll wait at this level here, I'll short it. And it never got to it. Even this is a great example here. I was like, I can't remember. This must have been at this point here. You know what I mean? Because this is where the lines come. I'm like, oh, look, it'll come up here. We'll short it down. It didn't even get anywhere. It just melted down further and further. So, look, came off a high time frame support area. What I've been looking at is this to be a little bit of an overthrow. Let's get this out of the way. So we've got potential wedge setting up through here. We tried to make a channel, didn't work. We tried a little wedge here, broke, and then just kept going down further. This is a big wedge. So this area through here, I believe, is something that we can work off. So it is a bit of a wedge. This is almost a bit of an overthrow of that. So if we put it on 4 hour, maybe it shows us a bit better. So I was trying to sort of thinking, I want to clean it up a bit. So there we go. So yes, you can see this is the potential for a measured move of this wedge, which comes in line with this sort of a resistance area that we saw, going back start of the month, a couple of weeks ago. So look, it does. Sorry, lost my train of thought. Yeah, so we got a potential bit of a wedge coming through here. This could be a bit of an overthrow. We did see a nice reaction to move back up over here. Obviously, this is still an area where we're seeing the sellers hold the line. So short term, a close above 65.80 above here. Well, then we can look for, the falling resistance here, and then these kind of previous highs, sort of being through here and through here. There you're kind of like little levels to see it potentially sort of move up. If, again, we can get that close above 85, that kind of course of action. little ups and downs along the way with it all, but that's what you're looking at. At the moment, you're still in the sort of idea that we could be coming back to test the lows here because, as you know, with these sort of things, this is the price structure. We've found support, we find resistance at a previous low. Now we're coming down. We've got to see this leg, what it does. Because this leg is either going to go, well, you know what, that was a flare up and on with the story. Because we are still putting in, excuse me, significant lower highs. So this idea is just based on the idea that you can actually start to put in some higher highs. And you see a little bit of a change of trend and it sort of moves back up over here. But at the moment, I mean, it's looking quite bearish in right this second. We've got support, we've got resistance, we come down here. If we take out these lows, well, bang, on with the story, and this wedge is just something else that doesn't work at the moment. Because as you can see through here, this is why I didn't want to delete all these, because it emphasizes the point of how much this sell down is just coming at all costs. There's no structure to it. There's no sort of like, okay, well, here we go. This is where the sellers will be. This is where the buyers will be. No, it's just sell it. Just sell it at all costs. If you can't sell it for this level, fine, whatever. Just get rid of it. And that be moving down. And I think that is telling in itself as to sort of what the strength of the move is, the reasons behind it, these kind of things. So, it's certainly a short, as I said, I was shorting from the top. I've been trying to sort of build long positions and I'm just getting blown out through this area here. So this is the leg we're in at the moment. Double bottom, so 65.40s. Break below that, look at 65. Lower high, higher low, and then potentially you see a change of structure to move up like this. And you're tackling the bounce highs from overnight up into the 90s, which the 90s we know is a strong area for the Aussie for support or resistance, either way that it comes. So if we find support before we get down to this low here, then we can start to sort of build a little bit of whatever that channel may end up being, something to this kind of effect. If we can get the lower high, higher low. You come down for a double bottom, well, then you look for a range, which also gives you a price target, or you break the lows and on we go with the story, just down over here. But certainly the bounce off the lows yesterday was quite good. I mean, 40 up to 94, a couple of points either side of it all. 50-point bounce, not too bad. So there is some buying interest down here. But as you can see, even these large bounces off this area over here, well, we go 50 up to, 92. So 45 point bounce up around this area. As you can see, dribble, 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 take out the low, continuation down, bang, and away it goes. So there's no guarantee that this is the bottom. I'm just giving a potential scenario in which we may be able to see this be a little bit of a base. There's certainly a lot of work to do to get through these areas over here. But this is why I sort of you look at all the other charts as well to sort of get a little bit more sort of confidence in the idea that maybe this is a bit of a bottom. If we see sort of copper weaker, if we see sort of gold fail, if we see silver fail, these are other indicators that's going to flow on to Aussie and it's going to be coming down here. I don't cover indexes so much on this, but if you have a look at sort of ES overnight, that's pretty weak, bearish kind of thing. I haven't even looked at NASI. That's bearish. How about the Nikkei? Not as bad, but still a little bit bearish as well. And these are on 4-hour charts. So, you know what I mean? Aussie, even as this has sort of been pumping up around the highs, Aussie hasn't been sort of really up around its highs. So if they start to see a little bit of sort of risk off come into that other segment of the market, that could also be flowing through to the Aussie here. But this is a potential scenario to find a bit of a base. We really just got to see where does this leg here come. If this comes back down, well, okay, on with the story. If we get the higher low, we get some support, then we sort of go, okay, now we've got to tackle this high here. You break that, and then this comes into effect. So we'll see how that goes here. But I think in the short term, underneath 65, doesn't look like much support. This was a pretty straight candle up through here. So yeah, I'd want to hold 60s, I would say, because 60s obviously a little bit of, if we get this stuff out of the way here for now, zoom this in, this is on the 4 hour, you can see that the 60s were, another, which is typically another area where Aussie likes to sort of oscillate back and forth. You can see it was support through here, broke through, it was resistance here, broke through, well, sort of rejected down, sorry, came back up, support through here. Boom, boom. So this is the kind of area you want to see Aussie hold. If Aussie can hold the 60s, then it's got a chance to get a bit of a push with a higher low. If it fails to hold this area here, then I think realistically you're coming back down to your 40s to sort of see if we see the continuation further. Top side, realistically, look, a close above, a close up in around 90, I think is what's needed because it's still got a lot of wicks here. It was a support. It's become a resistance. It's not just enough to get above it because you got that extra wick over here. You want to see a significant close, a close into the 90s. I think sort of gives you a little bit more surety that you may see a little bit more of a continuation. All right, onto silver. Silver, geez, it got a little bit of a clipping yesterday. This is where I was saying, okay, look, I think we're coming up. Test the highs. No, failed. So what we've got right now is a failed. No, that doesn't really work for anything, does it? No, well, we've almost at that sort of what you call, I guess, the measured move here. Maybe this, just playing around with things here to sort of see if I can get something. Maybe that's a little bit more of the wedge. I suppose that would be the place of the wedge because there's no connection down here. So with the wedge is obviously the measured move of the connection of the wedge, but there's no connection really over here. Anyway, whatever. Point is, it failed on its rally here. So what we do now, we take this high, and we say, look, if you want to sort of do more, you want to get above here. We can take these lows as well and say, okay, there's a bit of a triangle forming here. We've got buyers, obviously more hungry than these buyers were back here, sellers more hungry than these ones over here, which is giving us a little bit of a pinch. So till we get a break above, realistically, I'm going to say that's your downside. Under 33, even if you come out of this wick, there's a chance that you come down here and it turns into a range. But I would say above 34.50, sorry, over this area over here is the area that you'd want to get above for the top side move. I think above here we could see a little bit of a continuation. Below here is where I'd be sort of more safe on a silver short. Coming down under here, you've got this wick, you've got a support area here, there's just too much for me. Like, I mean, if you drag these things out, this is a plausible area you can see a bounce. This is a plausible area you can see a bounce. This is a plausible, you know what I mean? There's a lot of layers of defense down here if we do see some sort of little downside move. So for me, if I was to look to short it, I'd want to get down underneath 33. Because at the moment, really, it's a triangle. Again, look, if you move up over here, you still have the all-time highs. Sorry, they're not all-time highs, they're 13-year highs to sort of contend with. So it does give you a little bit of a limitation on the top side here. But I'd say I'm more given the fact that it's super bullish, I'd be more confident of just taking out those highs here to call that your breakout to move to the top side. I'd be cautious to be sort of selling into this. Just at this point anyway. Maybe this comes out, maybe we see a little bit of a bear flag and it goes down here, who knows? We'll sort of see. But for the moment, yeah, a bit of a triangle seems to be forming through here, in my opinion. I think sort of, look, above 34, you look at the test of the top side here, so 34.40. It really sort of sold down and it's kind of consolidating. And this is interesting because it is actually holding exactly where we kind of had marked out. Well, literally where we had marked out. So resistance, 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 breaks through, support, 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 bang, and this is where we've sort of held up here. So if we go above 34, I think you see a move back up to 34.40. Copper, a little bit of a, like, it's funny, if you've sort of been around for long enough, you know that sort of like say natural gas is called the widowmaker, just because it can like absolutely go insane, like 5, 6, 7, 8% that overnight, massive gaps, all this kind of thing. Very hard to trade. Copper's the heartbreaker, in my opinion. It's like, yes, here we go, bang, we got the breakout, yes, we got the back test, yes, and no, dribble, 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 dribble. And really, it was just a bit of a flare out at this stage. Buys are still sitting here, as you can see, kiss that line, and they push back up again. So it's hard to sort of say. I think even once you get above this breakout high candle, you've still got those previous ones over here. So realistically, above this level over here is where you want to sort of get to see further sort of continuation moving up over here. Downside still remains down over here. Yes, you do have a lower low over, sorry, a lower sort of level where it came into that buy zone around here around the 61%. Um, I would probably still want to say though, like, that was more just a little bit of an overshoot. This is like a pretty heavy sell down, a little bit of a sort of maybe stops underneath these lows. So I think maybe if you get down under here again, this isn't really like a super confirmed level like this 435 is. 435 is obviously quite strong and confirmed. I think if you get a close under here, this could be looking like a failed breakout, and then bang, as we know, failed breakouts are as good as a breakout. This could be a little liquidity grab, hit the stops, and then bang, we could be looking down at 428s. We could be looking at 425s, looking at 420s. We've got to work those sort of levels out. But I think certainly at the moment, it's just, oh, and a little bit of nothingness. So look, I do think that we overall have some move coming up over here. I'm a little bit sort of thrown on this, but if we look back at that massive breakout that we had, when was this? This was when was this? Oh, that was that breakout there. So even this sort of breakout through here was obviously, not with its greatest. It broke out and then came back, and that gave us that great buy zone, remember. So it is like sort of in line with what it does. What I was actually thinking to reference was this breakout, which that's also like August. I don't think so. No, this was the big breakout. This was the one that we were trading sort of, when is this? Jesus, a year ago. That's more like it. So we had the big breakout, and it goes and it fails, and it goes and it fails, and it goes and it fails. And this went on for months and months. So this is October. It was like March. Yeah, here, March. Because I remember I was just going off to Japan. I had a good position, great position here. For the time, it was quite a big position for me at the time. And I was like, oh, and that was the start of that big blow up over here. But this is what I mean in the sense that I use the term, it's the heartbreaker, because here's your technical breakout, and it failed, and it failed, and it came back down lower lows, and went up over here. So this is why I sort of say these things. The fact that it broke the horizontal, it needs to be respected. Excuse me. The idea that it breaks out and then if it doesn't just sort of break out and then come back down over here straight away, then that's a fake out. The fact that it broke this level here means, yes, it may take a little bit of stuffing around, higher highs, lower lows, a bit of all this kind of sort of stuff here, but the move did come. And if you look at it, how big this falling resistance was from way back here all the way down over here, it was a big breakout. So I think that sort of like this breakout here, came back down, tested topside, and it went. This gives me confidence that we do actually have a little bit of, so I'm just going to update this a little bit because let's grab this high on this side here. Let's make this a super thick one as well. This and this. That's going to be an interesting level, topside, because you've got the highs here, the bounce highs, pulls back. Are we going to see this move through here? And we can even sort of trade. Anyway, that's for another time. But the point is, the here and now, albeit on a smaller scale, we've broken out, and it's just heartbreaker. No, we're not getting the breakout here. So I think till you get a close down under here, I think buys are still a possibility. But at the moment, of course, you want to see these levels here. You want to see absence of sellers at 442, and then realistically, you want to see it go through 447. I think they're the levels to really sort of confirm that we might be getting a bit of a move back up. And of course, now that we've put in that big falling resistance, that could be a nice little target for our top side moves to come back up over here and hit this line as it does move up, and see maybe then we come back down here and maybe this triangle comes into effect. Downside, maybe this could come in as some sort of support. Again, we'll get to that as it sort of as we break. That's when we'll start to look for the levels. All right. USD China. Look, as I said, we had the failed breakout, shot back down here. Didn't get quite down to this support line. I mean, I guess there's a smaller, where we are, this on 4 hour. We got a small little zone through here. Whoop. Smaller intermediate zone through here. This isn't something super significant. I think this means more. This is going back. We can see it's been respected a number of times. I think this is more just a little intermediate level through here. We are pretty oversold, so we're seeing a little bit of a push up early here. We do have China data out today as well. PMIs coming out. Sorry, just bear with me 1 second. I'm sure we actually just had a bit of Aussie data out. Did we not at 11:30 today? Retail sales. Wow, came in pretty weak. Let's just have a little impact on Aussie for that. Get rid of this. Up on Aussie. 65, yeah, selling down. So, look, expectations of this was obviously that the numbers were going to be weak, and they were weak. So, let's see, half hour. Look, it sold down prior, as you can see. So, the idea again with this is sort of like, weak retail sales, people are doing it tough. People are, spending their money on their home loans, their mortgages. They haven't got the money to go out and buy the retail, so maybe they need to cut them some slack and lower the sort of the rates. That's the play out of that. I don't think it's going to be enough. Like retail sales in US seem to move the market a lot more than Aussie. As we can see at the moment, that's sort of like, yeah, there was a bit of a sell down prior to it, but as the data's actually come out, 11:30, it hasn't really done anything. It's holding the area that we said it needs to hold. This is the bounce point overnight. We've seen it be support, we've seen it be resistance. So it's holding this level here. Breakdown through here, well, I've already covered Aussie. Back above 75, it ignores the data. Well, it ignores the data from here, but it ignores this little sell down, and then we move back up and we look for that test of the 90s. So anyway, basically, I've already covered Aussie, but that's just sort of, showing what we could expect with the news coming through there. Nah, maybe something a little bit lighter and a little bit thinner. A little bit of a channel coming down through here. Again, I think just above 75 is probably where you want to sort of see this, just sort of say we're going to move back up and have a test for that continuation. So that's your level there. I know I already covered Aussie, but moving up here, moving down there. That's my sort of predictions with it. Okay, back to what we were talking about. No, we did silver, we did China. Okay, across to China. Yeah, so we have a bit of China data coming out today. I think it was the PMIs, is it? Where are we at? Yeah, PMI coming out looking fairly average, maybe a slight tick up in non-manufacturing, so I guess services. Um, but manufacturing is looking to be quite flat. Look, a beat on these numbers is going to strengthen the yuan. Strengthen the yuan is going to help the Aussie. A failure, or sort of a lower, weaker number on these things is going to weigh on the Aussie, and it's going to get Aussie to test the lows. So that's how that's kind of important. That's coming out in 40, 50 minutes. Later as well, just on the news front, we have BOJ coming out today. Now, they for some reason never give a time. It's generally sort of speculated it's going to be this time, that time kind of thing. It's around 1 or 2 o'clock, Aussie Melbourne time. So this will be interesting. Look, expectation is just a hold over here, but of course, like the yen, super weak as it has been the last couple of years, is a safe haven, and it's a competitor to DXY, well, to US dollar basically, in terms of safe haven status. It's just because they've had such an incredibly weak monetary policy that they haven't been really giving it any sort of credence whatsoever. But if they can start to make themselves look a little bit more attractive, a stronger sort of hawkish attitude, and then obviously some sort of movements more hawkish, that's going to have an impact on the US dollar because it's all of a sudden it is a contender again. It's just that while it hasn't been a contender because it's been so weak and continuing to be sort of dovish and weak, even at its sort of weak point, it's just not a contender, and so US dollar picks up any sort of risk off flows. In a typical, like maybe a typical from when I started trading anyway, is that you sort of the yen was the more preferred safe haven to the US dollar. And you can see this because when there was a risk off scenario and, your typical kind of things, equity selling off, Aussie selling off, and US and yen and USD were both strengthening because they're both safe havens. UJ, which is US dollar up, yen down, would be moving down, which means that more strength was coming into the yen than the US dollar. So, USD crosses against the euro, Aussie, pound, all them, they'd be strengthening US dollar. But the UJ, which is the two safe havens against each other, the yen would be the stronger of the two. And so it shows that sort of like that is a preferred safe haven. It's just that then you add in the fact that they're so incredibly weak and dovish on their monetary outlook that it just hasn't been a consideration for a long time. But it is something to keep in the back pocket because if that does start to sort of strengthen up a bit, that's going to be taking away some strength from the US dollar. Anyway, back to China. We've seen this finds a little bit of support through here. It's oversold. This is on the 4 hour. Look, it could sort of push up. I think that data is going to be the thing that either sort of gets it back up to retesting 714, or we see a test of 711 down here. Obviously, down is going to see copper, going to see Aussie probably sort of make their moves to the top side. A push back up here is going to continue that. I think once you see a break in this area, in this cross, in this yuan, US dollar, or US dollar yuan, I think that'll give you a break on copper. So we put the alert down over here. And realistically, you want to get under these wicks. It doesn't mean that the whole thing's going to fail and come down here, but I think that'll give the shunt to get US dollar, to get copper out of its little range. This is ranging, copper's ranging. When this breaks, I think copper will break as well. That's my sort of outlook with that. All right, cool. So I think that's pretty much it. We've done the news here. Going through the rest of tonight, we got euro retail sales again. Tonight we got core PCE. That's looking to tick up again. Same sort of thing. I think if we get stronger numbers here, that's going to sort of hold USD a little bit elevated. Unemployment claims pretty flat. I think we had a big jump up in these ones last month, was it? 42, 27, no. Actually, lower number. Oh, no, that's right, because it's every month, every week, isn't it? So it was a couple of weeks ago, 225, we went up to 258. So that was a big one that obviously saw US dollar get a little bit of a clipping. Obviously not too bad in the whole scheme of things, but did pull it back a little bit. So yeah, a stronger, higher number here is going to be weaker for US dollar. We got Chicago PMIs overnight. Nothing really sort of super market moving for me anyway. And tomorrow's a big one, NFP. NFP is expected to be a big drop off, but of course, remember, ADP was also expected to be a decent sized drop off. And that really bucked the trend and came out strong. Wait till they revise these numbers. I think that's my only sort of outlook with it all. All right, anyway, that's it from me.